Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 12th of March and you're joined by myself, Philip Northard.
And me, Curtis Hutchinson. This is episode 12, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
So, got a bit of a busy show today, haven't we, Curtis? I mean, we've got a fantastic interview with Louise Wallis, a special guest today, who's the head of business management at the National Franchise Dealer Association, or others known as NFDA. And she's going to be talking to us about the newly published dealer attitude survey with some interesting changes to it, some increases, decreases, winners, losers. We're letting Louise go through sort of that top and bottoms rather than yourself this time.
Yes, it's always a fascinating insight because the dealer attitude survey, it's published twice a year, so there's a good 6-month gap between them. So it's always interesting to see how the rankings compare with the previous ones. So we'll get Louise to talk us through that.
Definitely. And as always, you know, if you're wanting to get in touch with the show, in touch with Curtis or me, then please do, you know, if you want to drop us a press release, come on the podcast, share some results of a survey that you've been looking at, etc., then please just get in touch. You can find both of us on LinkedIn and Facebook and Twitter, or you can email us to Motor Trade Radio, get that right, Curtis, at yahoo.com. And you know, please do get in touch.
Yeah, I thought we'd just been rebranded then, Phil.
Yeah.
So it's been a big week this week because last weekend, anyone who listened to the show last weekend will know that we covered International Women's Day, and actually on International Women's Day on Tuesday was the Cox Automotive Woman of the Year, and you've got the finalists and the winner, haven't you?
You have, yeah. So it is the Barber Cox Woman of the Year, and this is an annual event that we support, and this is for basically women within the automotive industry outside of the Cox Automotive business. So unfortunately, you can't enter if you are an employee of Cox Automotive, but it's always a fantastic turnout and a great event, and this time it was both physical and virtual. Whereas previously, for the last 2 years, for obvious reasons, it has been just virtual. But a great event, and the winner this year was Caroline Burnell, who is Head of Marketing and Communications at E-Star Truck and Van. And I think you know Caroline, don't you, Curtis?
I do, yes. Caroline, before she was there, she looked after the press and PR for Mercedes-Benz light commercial vehicles, and I must say she did an absolutely outstanding job there, so I was really chuffed to hear that she'd won. So really good winner, and we'll try and get her on the show, won't we, to have a chat to see what this all means to her. Yeah,
we have reached out to her, and I think Caroline said she would love to come on the show, and so hopefully that will happen in the next couple of weeks, so please do listen out for that. And as part of winning the award, which is a very prestigious award, she also gets £5,000 towards her personal development career. And what we can't forget in this is that there were 6 finalists in this year, and there was a lot of nominees. I mean, a great turnout with nominees, and we can't miss the fact that there's those shortlisted, some great shortlisters this year with Kyra Rayson from V12 Vehicle Finance, Claire Perkins from Stoneacre Motor Group. We also had Emma Loveday from AA Drive Tech, Nicola Hobson from Trust Ford, and Nicola Gilder from People's Ford. So 2 Ford nominees and shortlisters there from 2 of the Ford groups that we've had on the podcast a couple of times, Curtis.
Yeah, a really great list there of finalists, and congratulations to everyone, because being shortlisted is an achievement in itself. So they should all be really pleased with that.
Definitely. So I say, listen out, because hopefully Caroline will be coming on the podcast in the next couple of weeks, and we'll ask her what it means for her and dive into her career a little bit more.
So, shall I tell you about this week's headlines?
Yep.
Okay. 1/3 of UK motorists are looking to buy a new car this year. MG curbs petrol car orders due to short-term supply issues, but it is not abandoning ICE, as was reported elsewhere last week. ITV teams up with CarWow in a clever advertising for equity deal. Ford plans to split EV and ICE, and this could spell big changes for dealers. And we have news on 2 dealer group acquisitions.
Yeah, so a bit of a theme running here. So as you say there, Curtis, that 1/3 of UK motorists are looking to buy a new car this year. And this is a poll by Motor Supermarket. And they said that 33% of motorists are looking to buy a new car in 2022. Now, I suppose the question...
Good luck to them.
I was going to say, the big question is if they can get it. There's one thing buying it. I suppose it's taking collection of it is the big question that people might be shouting into their radio or their phone this morning as they listen to the podcast. But I think positively there is still a market there for new cars. I think the key is whether they can get them or not. But this is a survey of 2,000 motorists that that petrol... was it that they found that 2,000 of the motorists said that petrol remains the most desirable powertrain, with 30% of those asked telling researchers that it would be their preference.
Yeah, so it's a survey of 2,000 motorists, and 30% are saying that petrol would be their fuel of choice. Hybrid accounted for 27%. Diesel only 6%, and unfortunately it doesn't say how many opted for EV, but presumably it's below 30% because petrol is the biggest proportion. But what it does tell us about EV is quite revealing. So those who did say their next new car will be an EV, or ideally will be an EV, their choice is driven mostly by environmental considerations, so that's 71% of those buyers. 57% opted for electric because they think it will be cheaper to run, and the way fuel prices are going at the moment, they could be right, although...
Be interesting to see what the findings would be next week as well on this one.
But. Exactly. And 47% said they were motivated by government subsidies. But it is encouraging, this survey, because it does show there is an appetite out there to buy new. And, as we know, those new car purchases may end up being used car purchases, depending on what's available, on any given forecourt. But the research does actually show that most buyers will actually opt for finance as part of their purchase. So they're not looking to fund these new cars themselves.
No, and you say there with the results there, I mean, it is positive. There is still a high demand for new vehicles, and increasing demand for electric vehicles. I think that's a positive result there and a positive move. And I think, as you say there, it's a case of what vehicles they might be able to get this year. I know that before the show we discussed a media release that was done in the Financial Times that they sort of looked into sort of buying a new electric vehicle and found that they couldn't get one, or couldn't get the one of their choice, and said that I think it was a bit of a headline and not much content to it, unfortunately, but that they said that they would buy an EV if they could get one, which is obviously referring to the fact of lead times or availability on some of the electric vehicles, or an electric vehicle that suits their driving behaviours. But I think what is key with this, though, is that there is an intent. I think this supports the eBay Motors Group survey that they did recently as well, that the choice is about sustainability, isn't it? This is all about that environmental issues that is making this decision towards the move towards electric. And maybe 169 at the pumps might also be helping that choice towards electric at the minute, but we'll see where that goes.
You realise by the time we go out on Saturday, it's probably gone above £2.
Yeah, well, I think it is in some place. I think some people are reporting that, is it €2 or something? I think someone said this week in some European markets. So yeah, it's suddenly going up, and there's a lot of headlines on that at the minute. But yeah, sticking with EV, and you alluded to this right at the start of the show, Curtis, that the story that we're going over to is in Auto Express, and this is MG curbs petrol car orders due to short-term supply issues. Now, it was picked up the other week, this, wasn't it, that it was down to stopping petrol or combustion engines entirely and only supplying electric. But this alludes to the fact that this is down to supply constraints that they've got.
Yeah, I chose this particular story because Auto Express published this the day after a story came out from AM. Now, the AM story was based on a circular that went around MG's dealer network, so presumably someone shared that with AM because they quoted heavily from it. And the gist of it was that there was an issue in terms of getting new petrol engine cars fulfilled in time to meet orders. So the suggestion was that move customers towards electric vehicles. But this story sort of picks up on that theme, and they speak to someone at MG who says we have seen a very strong start to 2022 with a lot of orders, with a lot of demand for our new cars, which has led to some short-term delays in the supply of certain models. So our dealers are being asked to only place orders for vehicles in the existing supply pipeline. And I guess the key to this story is they then went on to describe reports that MG's 2022 allocation of petrol-only models being sold out that is actually untrue, pointing out that, like every manufacturer, we try our best to forecast future demand and order stocks accordingly. So MG sort of putting the record straight there. So some interesting developments here.
Yeah, no, like you say, I mean, they're talking that MG retailers will be limited or no pipeline orders, that special actions are being taken to ensure that they keep pace with their respective customer demand. And even though MG has steadily increased its profitability of pure electric cars and portfolio of EVs with models like the MG5 EV and things like that, that they are continuing the combustion engine cars are still make up in a sizable chunk of sales in the UK. So again, being constrained by supply shortages, as we've talked about numerous times on the podcast over the months, but you can see now where it is obviously continue to have an impact around supply.
Yeah, and staying with the electric theme, Automotive News, the headline there is Ford EV ICE split will mean big changes for dealers. So I do urge you to go over to Automotive News to read this story, because it's based on an interview with Jim Farley, who's the global boss of Ford, and really sort of shedding some light in advance with regards to their strategy and how EVs will be sold in the future through the dealer network. And he does emphasize, throughout this piece that he is looking to work in collaboration with dealers. And although this is a US story, what Ford does in the US, it will do in Europe. We can virtually guarantee that. But within the story, it says that Ford has actually revealed its plans to split its business into separate divisions. So Ford Blue will be designated for internal combustion vehicles, while Ford Model E will be for EVs. And you can see what they've done there, can't you?
Yes, you can. Yeah. They've connected two
Model
things.
T.
Yes.
Yeah, Model E, Model T. Yeah,
and kept the blue logo for the combustion engines with the Model Blue, Ford Blue, I suppose, in many ways. But yeah.
Yeah, and reactivated the Model T under the Model E guys. So, and the piece goes on to say that while long-standing franchise agreements ensure the structure of its retail network must stay in place, Ford wants to actually bring to market a new set of operating standards for EV sales. And this is all about how it addresses really the likes of Tesla, who have obviously come on the scene and made huge inroads into that electric current and future.
Yeah, and I think the tone of the story is this is going head to head with Tesla, and Jim Farley there is two nice little quotes there that he says that our message to the dealers is we're betting on you, and get ready to specialise. So this is really probably focusing that dealer network either through electrification, through the Model E, or remaining with the combustion engine in the time being, to focus on those two separate divisions. Now, I suppose you could question which direction this is going to be going in. Is this a move into the world of agency modelling?
Yeah.
Is this a move into where the Model E proposition moves into the online space, similar to like we've seen with the Volvo? And starting off with Polestar, and now the new model Volvo electric being purely online only. So there could be a move in that direction with this. It's not mentioned in the story, but it's probably one that we'll be keeping a close eye on. And because this is very much US led, and agency necessarily isn't being talked about in the US as much as Europe and the UK generally, but it may be that move as this enters the UK and European markets, that it may be split in terms of the agency model. So something to keep a close eye on, Curtis?
Yeah, and you raise a good point there, because dealers in the US are a lot more powerful in terms of their relationship with their OEM partners than they are in Europe. So whether or not agency would work in the US, is a matter for debate. But it's worth pointing out that Ford operates 3,100 dealers across the US. I mean, this is massive. And so the story suggests that the dealers will have the option to opt into EV sales in the same way that they can opt in for commercial vehicle sales. But what the story does actually question, because no one knows at the moment, is whether or not dealers will be able to go down the sole EV route. So I guess we'll just have to wait to see what happens there. But the Ford Dealer Council in the US, they're quoted in the story, and they appear to be pleased with the level of cooperation that's being shown by Ford.
Yeah, no, and I think one thing is clear throughout the story, and as Curtis said, you need to head over and read the story, because it's quite an in-depth story that they've done on this. But they do start. This is a collaboration with their dealer network, and they'll be working very closely with their dealer network. So it's not that they're off doing something away from it. And especially with 3,100 dealers just in the US alone, I mean, that's you wouldn't want to go against that, would you, necessarily overnight in a press release?
Definitely not. I would suggest this. I would suggest this story came out because of it is, of course, NADA at the moment.
It is, yeah.
And Ford traditionally has a large presence at NADA, and it will be sitting down with its dealer network. Because all the OEMs host dealer meetings over the course of the convention. So I suspect this was a bit of PR that Ford put out to get the debates started.
Definitely. So sticking with PR, and we've decided to pick the story out of Citroen, and this is about the ITV teams up with European car seller CarWow in advertising tie-up. Now, I think you're probably better explaining what this actually is, because this is a tie-up between both, as I say, ITV and CarWow, and mainly around their car buying proposition as well.
Yeah, it's I'm glad you've left it for me to explain, Phil.
Yeah, you're welcome on that one.
I'll do my best, but it is worth looking at the story on Citroen, and if you have got the time, I'd also compare it with the story that Car Dealer have run, because they posted a story on the same day, and they've interviewed James Hind from CarWow. But sticking with the Citroen story for the time being, so what it's done is it's within the story is saying that ITV has announced that it is investing in a partnership with CarWow in return for advertising inventory across ITV's channels and the ITV hub. So it's quite a clever contra deal, this. And this marks ITV's first media for equity investment in 2022. And it's actually the first time that Carwow has done anything like this. The deal is worth at, the City AM say it's worth 2.5 million. So as part of the deal, ITV is acquiring a minority stake in Carwow, so that's valued at £2.5 million in return for that advertising inventory, with the option to invest a further £2.5 million. And the car dealer actually puts this into a wider context because it's talking about the latest round of investment that Carwow is going through, which totals something like 17.2 million. So, and you alluded to it earlier, this is really around the Sell Your Car service, which Carwow launched last year. So I think what we can expect to see is some fairly heavy duty advertising across the ITV channels for Carwow's Sell Your Car service, and I'm sure that will be happening fairly soon.
Yeah, and they allude that they're talking about this deep understanding of both content and commerce, and helping buyers and sellers across UK, Spain and Europe. So it looks like there is the sort of continental European angle on this as well. So it's the first time I've publicly seen this done. I don't know whether it is a thing that does tend to happen, but I think it's quite an interesting way of doing this, isn't it? I think for the way Carwow have been shaping their business and doing their sort of strategic growth plans and moving into those European countries as well. I mean, teaming up with someone to the power of ITV Adventures is a significant game, isn't it? The winner of that.
Yeah, and there's a telling quote from James Hind at the bottom of this story. So James Hind, of course, CEO and founder of Carwow, says, "We look forward to deploying our first campaigns with ITV right away and building out our presence quickly over the months ahead. Any car owner can benefit from our offering, and given ITV's unique reach to households across the country, they were the obvious partner for us." So, a fascinating arrangement, this. And we will be seeing the results pretty soon.
Yeah, definitely. So, moving on to the final two stories of this morning that's coming from AM and Motor Trader. The first one is the acquisition of VW dealer Trust Group UK. And this is Johnson Cars has acquired 6 dealerships, Skoda and VW, off Trust Group UK. So a nice little acquisition there, and really it's dealerships in Redditch, Stourbridge, Wolverhampton will retain with their Trust Group branding under the new ownership of Johnson's Cars. So again, the acquisition, but remaining with the name.
Yeah, and that is interesting that they are retaining the name, and they're also retaining the Trust Group name for the TPS centres, which will be in Birmingham, Coventry and Wolverhampton. So this gives Johnson Cars its first entrance into the TPS world. And worth pointing out, Johnson now operates 50 franchise sites and has 15 brand partners, and that's across the south of England, West Midlands and the Northwest. So, a good acquisition that really does grow the business there.
No, yeah, it's you're right there. I mean, the size of the new ownership of, they were 31st ranking in the AM100. So again, a good business that, and you can see Johnson's have been fairly busy recently with some acquisitions as well, haven't they? I mean, we've reported a couple of times on some of the acquisitions that they've been taking from Citroen and others over recent years. So a little bit of a growth plan there from Johnson's Cars, and a nice little purchase there from them.
Yeah, and the final headline for this week, ahead of our interview with Louise Wallis, and it comes from Motor Trader, and it's Chorley Group acquires 2 Citroen dealerships from BCC. So this is Chorley Group, which currently operates 12 franchises across the Northwest and employs 300 staff. So it confirmed that BCC Citroen will become part of Chorley Group from this week, actually, and it will trade as Chorley Group, Citroen, Blackburn and Bolton. So all the current BCC employees will be staying on after the acquisition, and that includes 3 of the senior team of directors.
Yeah, no, as you say there, but further up north than you would know there necessarily, Curtis, probably more my territory across this northwest area. But no, nice little business. Chorley Group, great little operation over there. And BCC I've known years, and like I say, they operated under that, mainly known for the Citroen. But
Yes.
yeah, Luke taking both the, as you say, the Bolton and the Blackburn sites, going across now onto Chorley Group, which would be a nice little addition to the Chorley Group, ties up their sort of territory nicely, and moves them further into that brand. And good operation of the Chorley Group. They get some great events. And I think we covered them recently, didn't we? With their the party, I think it was, or something, wasn't it? Was it the Christmas party? I can't remember what it was. We talked about them where they closed the business for the
Yes,
day, if you remember.
They gave staff the day off, didn't they?
Yeah, to recover from a night of alcoholic event. But again, great little business, great little acquisition, and great little move across, and they are keeping the staff on as well. So
yeah. And it's worth adding that BCC continues. So there's a nice quote from Mike Holt, who's founder and chairman of BCC, and he actually says that he established the business in 1980 using my father's house as security. So the business means a lot to me. And they do continue. They run a Hyundai business in Bury, as well as having a dealership on the Isle of Man. So it's good to see that Mike is still in the business.
And that's, so we've got the midway break now. So you're listening to All the Chatter That Matters on Motor Trade Radio podcast, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your favourite podcast feed. And we'll head over now to the interview we carried out with Louise Wallis, who is going to run through some of the sort of the highlights of the winter dealer survey. And great little interview this, so please stay tuned for that now.
We're delighted to welcome back to the Motor Trade Radio podcast Louise Wallis, Head of Business Management at the National Franchise Dealers Association. Louise is joining us to discuss the newly published Winter NFDA Dealer Attitude Survey. This one, of course, is the twice-yearly barometer polling the views of franchise dealers on the car and van brands they represent. So welcome back to the podcast, Louise.
Hi, great to be back, and particularly to talk about the DAS.
Yeah, definitely. So, it's sort of this thing that we do wait for every year, and when it becomes available, and probably a very poignant time that this has been published now, isn't it, I think, really. So, welcome back to the podcast. It's always a pleasure having you back on, Louise. So, you've spent the last few weeks probably analysing the findings, and just like to take your view on the sort of the general mood and level of satisfaction across the franchise dealers.
Yeah, I mean, it was a very positive report this time. The dealers were very positive. We had rises in the scores across most of the questions, and particularly on questions that are very important to see what the barometer of the industry is, particularly the overall value of the franchise and the profitability questions. So yes, it was good to see. I think it reflected well on where dealers found themselves at the back end of last year, bearing in mind that this was done in January, so just straight after Christmas. And I think also being able to compare it to last year and also last summer was good as well, which also showed that things were certainly a lot better. There are ups and downs. I mean, some manufacturers, as ever, always do a lot better than others. But it's the way of the world and the cycle of manufacturers.
And this survey, so it's the Winter 2021 survey. It was conducted in January, and you actually had a record 67% response rate, and also one of the highest scores was for current profit return, because you scored 7.1 out of 10. How has this actually changed over the last 6 months since last time we spoke about this?
Yeah, I mean, over the last 6 months, that score has risen. It hasn't risen evenly across manufacturers, but the vast majority of manufacturers have shown an improvement in that score. And I think that is, very encouraging and reflects well how dealers have been operating and their profitability over the last few months.
And any thoughts on what has prompted the change in terms of that profitability?
Well, I think the main issue has been demand and supply for new vehicles and used vehicles, of course. We have had a shortage of supply as vehicles have been difficult to get through because of the very well publicised issues like superconductors and other parts that have been in short supply. So cars have been coming through for new car sales, but they've not been coming through at a fast rate. We've also had the issue with used cars as well for the same reason, that there's been a high demand for those. And I think the other side of the new car supply issue is that we haven't been pushing registrations to meet targets because the manufacturers have pulled back a bit on targets because the supply hasn't been there, and therefore you haven't got lots of registrations of vehicles that can suppress profitability in dealerships.
And in terms of, one of the key questions in this survey every time is how would you rate your manufacturer overall on a scale of 1 to 10? Now, this one is the one that I think many manufacturers reference and look at for obvious reasons. But can you take us through some of the sort of top performers and the higher risers and essentially some of the biggest fallers as well? Because I know there's been some low performers and some heavy fallers, haven't there, this time?
Yes, I mean, it was probably a more active result than we normally have. I mean, the top performers were Lexus, Kia and Toyota, all who performed extremely strongly. They all scored 9 or just under 9 points, which is a very, very strong score for that question. And in fact, they all improved except Toyota, who fell slightly. So that was encouraging as well. We also saw strong performances from Mercedes and BMW, who were the next best performers, and BMW improved hugely on the score, going from 6.5 to 8.3, which was a huge change for them, having had a couple of surveys where they'd slid down a bit. Also, other ones that improved were Mini, Honda, VW, Subaru and Ford all showed strong improved performances for this question. On the other side of it, of course, there were those who performed less well. I don't like to necessarily name and shame, so to speak, but I suppose the scores are there. I mean, Renault, DS and Alfa were the bottom three, with DS actually the biggest faller of all the manufacturers on that question. And both Renault and Alfa both showed significant declines for that question as well. So it was interesting in that respect that there's obviously some significant concerns at the moment from the dealers in those networks.
And just on sort of those top and bottom performers, I mean, is there, from your perspective, is there any sort of view on why you think some of that is? I mean, we've had obviously a torrid period of time for the last 2 years of supply and things like this, but have you got do you think that there's a reason for some of these? I mean, maybe the DS1 and Alpha may be a challenge down there at the bottom, but I mean, Lexus and Kia have done exceptionally well, haven't they?
I mean, I think it's a combination of issues. I think supply issues hasn't helped, and that's then had a knock-on effect to things like profitability. There's also demand from manufacturers in terms of capital investment and the return on that investment. And those factors all play together. The other one, I think, is just down to pure communication. They don't do particularly well as brands when you look at the communication questions as well. So it's a combination of those things that will cause poor scores. The manufacturers that always do well are the ones that communicate well with their dealer network, listen to their dealer network, have investment levels that are commensurate with the profitability for those networks, and that all works together to get a high scoring manufacturer on the DAS.
And an interesting observation. I've just noticed this. I mean, you mentioned Renault at the bottom of that table, and Dacia, the sister brand, is midway up the table. So, an interesting dynamic going on there within the same showrooms.
Yes, and that can happen. We see that with other brands on other occasions, either with sister brands or brands that work very, very closely together. I mean, everybody always points out to the difference in scoring between Kia and Hyundai, which we regularly get, but you also get it with BMW and Mini as well.
Yeah. And following on from that, Louise, tell us about how that actually fed into the overall average scores achieved by the OEMs.
Yes, so if you look at the overall average scores against value of the franchise, but also the profitability scores and investment ones, you'll see that it's usually the same brands that sit at the top of those scores as well. So Lexus, Kia and Toyota all had the best overall average scores across all questions. So the two sit very much together. And interesting, Mercedes and BMW were in 4th and 5th place, and they also were doing well on the other questions as well.
Yeah.
And you get the same at the bottom end as well with the poorer performing networks.
Yes,
Yeah.
because in this table, Fiat are at the bottom, followed by Hyundai, Alfa and Abarth.
Yeah, whereas you get sort of Toyota and Lexus, who are obviously sister brands that are in 1st and 3rd position, aren't they? So there's obviously, in terms of those sister brands, there is certain things that do seem to work together, and VAG probably again seem to all sort of gather. So there is seems to be for certain brands some consistency in terms of the way they operate and have the relationship with the network, whereas others don't. But yeah, interesting as always. I mean, in terms of used cars, we know that used cars is very much the focus at the moment, especially within the franchise dealers, selling older, higher mileage vehicles to compensate for the shortage of product and what's happening in the new vehicle marketplace. But what does the survey tell us about that sort of about the satisfaction around used car margins for this time?
Well, I think the most important thing to point out is that the score for that question has gone from 7.4 to 7.7 this time, which is actually quite a strong improvement in scores. You don't normally, when you add everything together, have a huge increase on a lot of scores. It usually goes up by 0.1 or 0.2, but it's gone up by 0.3, which would suggest that the dealer networks are happy with their used car offering at the moment. I think the margins are strong. There's plenty of demand, as we well know. The only probably issue they may well have is around supply, but they're making good money on used cars at the moment, and therefore that's reflected in the scores. Again, it varies from network to network. We've got Lexus, Kia and Toyota at the top yet again, but interestingly you've got Ford, who hugely improved on this survey, and also Nissan, Mercedes and Vauxhall did improve significantly as well. So showing that their networks are getting the used car offering right. Again, we do have a number that have fallen quite badly, and again, a lot of that is around lack of supply and consequently probably lack of sales and profit potential.
An interesting point you made there, Louise, about 7.7 being one of the strongest averages. Would part of this be that the franchise dealers aren't just selling in franchise cars, they're selling out of franchise cars, which maybe 12 months ago or 2 years ago they wouldn't have been doing so to such an extent. Do you think that would feed into these improved margins?
Potentially. I mean, dealers have had to be savvy and look for opportunities when it comes to refilling their forecourts. with new car sales lower than normal, we're not generating part exchange vehicles, so there has been a need to find vehicles for elsewhere. So yes, some of that is being filled by non-franchise stock, and in some cases also older stock they would normally sell.
And finally, with the sector increasingly focused on this switch to electric in 2030, how satisfied are dealers with the alternative fuel offerings from their OEM partners?
I mean, the overall score for the question at 6.9 is reasonably strong, and that has risen very, very slightly since the winter. But what I would say about the score on this particular question is how varied it is. We have a number of franchises who are doing extremely well in this question. Kia, Lexus and Toyota yet again, but also MG, all scoring very strongly on the question. And we've also had a number that have improved quite considerably since the last survey, where you've got people like BMW, Mercedes, Audi and Hyundai, who was the best improver on the question, have all made huge inroads on this. But again, there's still a number of networks that are not doing so well, where obviously dealers at the moment have some frustrations and concerns.
Yeah, I mean, as you say, I mean, there is a lot in this survey, and I suppose really from a time in the sector with the challenges facing new vehicle supply, which is better for some manufacturers than it is for others. We know there's other headwinds facing the dealer sector from certain manufacturers in terms of, we talk about you can't go a day now or a week without agency model being discussed and what that impact's going to be, and the consolidation within the market. So there's a lot of things at play that will be sort of influencing some of these results. But again, you just can't take it away from those top performers with Lexus, Kia and Toyota that seem to have that stability in place at the minute. And you're not really hearing much of them in the market around some of the headwinds as well. So maybe there's something in that. But again, always an interesting reading. I mean, just before we sort of close on this, is where, if for anybody that is listening, I mean, where can they get hold of copies of the survey? I think, it's obviously been covered by the media, particularly the trade media, but where can they go to get a copy of the detailed survey?
Well, it can either be found on the NFDA website, or it can be got from contacting us in the office via either my email or Lena Patel's email, and that's how we can get hold of it.
Brilliant. And you are on the social channels as well, aren't you?
Yes,
So
I'm on LinkedIn and things as well.
And NFDA are on obviously the Facebook and Twitter as well. So they just need to get in touch, and they'll gladly get a copy and a link to the complete survey, because it is an interesting reading. It takes a little bit of time just to look it through and see where some of those questions are weighted and things like that. So, I mean, it just remains to say thanks again, obviously, for just giving us a little bit of sort of context and your view on some of the performances and results of the survey. And, I look forward to the summer survey, which will be... you'd be thinking about that soon, that'll be around the corner pretty quickly. As soon as you're talking about the results of this one, you'll be planning the summer survey, I think?
Yeah, it will, because that will go out at the beginning of July. So the next process will be to review the questions and see if we need to make any changes, and then we'll get it out. And
if anybody's listening today, I think it's key that, this is about the dealers and completing the survey, isn't it? It's all about that uptake and completion.
Yeah, very important that dealers engage with it and fill it out, because without your support for it, it would not be as successful as it is.
No, and it was a particularly impressive return rate you had this year for this survey, because it was a record, wasn't it? 67% response rate.
Yeah, and we've been slowly pushing that up, so it's good. If we can keep doing that, it'd be great.
And we know that the OEMs are looking at this, aren't they? I think that's the key with that over the years now. There's, you've gone through that stage of trying to get the manufacturers themselves engaged with the survey, but now we know they do engage with it, they do reference it, they do support it, and they do want their dealer network to engage with it, because it tells them a story, doesn't it, with this?
Yeah, I mean, these days virtually every OEM heavily supports it, and we're engaged with them in the whole process of getting it out and getting it completed.
Yeah, well,
And Louise, the journalist in me, would love to see a question in the next survey about the agency model. Any chance of that, do you think?
It's possible. I mean, we have been talking about changing one or two of the questions because we want to keep it fairly stable for comparative purposes.
Yes,
but there are questions in there that at the moment may actually be obsolete. Somebody said to me, "Well, why are we asking about pre-registration when we haven't got enough cars to sell?"
Yes.
So there is a
chance would be a fine thing.
Yeah. So we will, and I think like some of the questions on COVID are now getting a bit obsolete as well. So we will make some changes in there.
Yeah, there's certain ones that need to remain, like you say, for comparison reasons, but others can be more dynamic reference to the marketplace. But as with the EV and things like that, and we'll be interesting to start to see where this profitability one starts to go as we head through 2022 into sort of 2023, and the supply and demand starts to change possibly. But again, remains me to say thanks for joining us today, Louise. Always a pleasure, always great having you on, and you're welcome back on anytime, and in the future, and if not, then we'll look forward to chatting about the summer survey when you eventually get around to doing that one and talking about the results.
Yes, well, thanks for having me. And yes, we'll have the summer survey sometime in September, I suspect.
Fantastic. Thanks again, and we'll speak to you soon.
Hey, Phil, I hope Louise didn't mind my cheeky question about agency model, but I couldn't stop myself.
Yeah, maybe. Well, we'll see if it gets included. She did say that they were going to review the questions because some of them have been very much led towards the COVID and things like that. And they have changed them because they're talking about EV a little bit more now. So maybe it'll get on in there, see how that one goes. That'll be interesting, that one. It might expose a little bit too much from the OEM side, but we'll wait and see. But great interview.
Yeah, great interview. Always good to have Louise on. And it's a brilliant piece of research. I've been reading it for the last 20 odd years, I guess.
You've reported on it many times as well, haven't you?
Yes, indeed. And it is available on the RMI website. You can download it as a PDF, or if you want to get in touch with Louise, she did say that you can email her. So that's louise.wallis@rmif.co.uk. So do drop Louise an email and do tell her where you heard about it.
Yes, please do. And she did say she'll come back on when the summer survey is done and run us through the results of that.
But Phil, that's all for this week. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.